Warren Buffett warns, get ready for the ride. Although the stock market has seen a decline of 20% in the past several years, prominent investors such as Warren Buffett are getting ready for the ride. The value investing strategy that Warren Buffett popularized is well recognized. Some people believe that we haven't seen anything yet, with a prominent fund manager recently predicting that the S&P 500 will drop by more than 20% by the year 2023 as a result of an impending recession. Understanding risk and reward, as well as knowing when to invest and when not to, are essential to be an expert investor. Are you prepared to handle whatever comes your way? Hi, you've reached Finance Sense, the place where we discuss all the most recent trends in the financial markets and the economy. Would you want to understand 5 bits of advice from Warren Buffett that you can put to action in the event of an upcoming economic slump and boost the returns on your portfolio? If you answered yes, then you should watch this video. But before we get started, make sure to give this video a thumbs up, hit the bell notification button, and subscribe to our channel so that you can stay up to date with our new videos. Having said that, let's get started. For years, Warren Buffett has taught us how stocks are an investment that will last a lifetime. He was, to a large extent, correct in his assessment of the situation. As a result of this, he is well versed in the art of money management. He has been giving us stern warnings to brace ourselves for whatever may be in store for the markets in the near future. Even if Warren Buffett is a proponent of bullish markets and optimistic growth projections, this does not mean that he's completely oblivious to the realities that exist in the world today. Number 1, refrain from panicking about panic selling. You must always remember to control your panic while selling a successful company. According to Warren, some individuals shouldn't own stocks because they get irritated when prices change. You shouldn't even attempt to trade stocks if you're going to act foolishly as a result of your assets declining in value. He used selling a property as an example. You do not sell it just because someone gave you a code. You inspect the home before making a wise choice. Perhaps some people aren't emotionally or mentally prepared to own stocks, but according to Warren, the longer you hold on to stocks and bonds and the more you learn about the business you're investing in, the less risky they become. In contrast, a bond gets riskier the longer it has until it matures. Buffett makes a reference to Mr. Market by Ben Graham. If you have a nosy neighbor who sticks his head over the fence every day and makes you an offer on your house one day, he offers you $800,000. The next day, feeling depressed and concerned about the potential collapse of the real estate market, he makes you an offer of $300,000. Will you let him purchase your house? Obviously not. You go back inside and keep going. Why give up a piece of a great business just because someone else will pay you less? Number 2, seize the opportunities that come your way. The stock market is the only place where investors run out of the shop during a sale, said Buffett in another statement. Because this is a highly faulty line of thinking, you should avoid being the one who sells the stock when there has been a change in the fundamentals. If it is no longer rational to hold on to the stock because of the drop in price and the ability for the company to generate cash flow in the future will be damaged irrevocably as a result of the decline in price, then you should sell the shares. Omission is a contrast to the commission of an action. Yes, occasionally there are significant market declines due to these occurrences, but they are rare. The most recent major one occurred in 2008. He may claim that it was a significant one, but all it did was make business valuations more equitable. The great majority of businesses become cheap as a result, cheap as it was in 2001 and 2002. As a result, considering how rarely that happens, it is like 2 ample opportunities. Number 3, understand what you're punching. Warren has stated that the concept that one should only aim to be financially successful in fields in which one is already skilled is an outmoded one. And by understand, he does not mean to suggest that he is aware of the product's functions or anything else of the kind. He meant to understand how the business's economics are likely to develop in the future, or what the overall state of the economy would be in the future. Additionally, he compared Wrigley's with the internet. The way people consume candy won't change because of the internet. It will only change the type of candy they consume. These companies will be around for a long time. If you have a big candy market like the M&M's and Reese's brands, you can thus estimate with reasonable accuracy what the numbers on Wrigley's would look like. But if you attempt to predict anything similar, you won't be too far off. It is within what you refer to as your side of competence to evaluate the business. You have an understanding of the business's economics and competitive dynamics. This is important advice, considering how frequently businesses file for bankruptcy amid a market crisis. Airlines, travel companies, and cruise lines have all made news in the past. But the companies in the news right now are fast-growing technology companies. If you don't understand a company, you shouldn't invest in it, no matter how cheap it has become. You may have invested since it appeared to be so inexpensive, but it wouldn't have been the best course of action for you. You must first make sure you understand them since they are affordable throughout market crashes. But before we move on to the next segment of this video, I just wanted to ask all of you guys what your thoughts are on Warren Buffett's tips as he warns for a great ride that is about to happen. Are you aware of and currently doing the tips he is employing? Are you ready in case a great ride happens? If the answer is yes, then let us know in the comment area below so that we can continue the discussion. And with that, let's proceed to watch the video. Invest in reputable businesses instead of inexpensive ones. Warren claimed that Ben Graham taught him how to buy things quantitatively, so he went out searching for equities that he termed cigar butts. The cigar butt method of stock investing is like hunting for cigarettes on the street and finding this awful-looking, wet, disgusting cigar. You take a smoke after picking it up. Disgusting. Although it is free, you discard it. You glance around for another stale, puffy cigarette since it's inexpensive. This is a mistake because it's so much simpler to acquire excellent companies for a reasonable price. Now, you would instead purchase a great company at a fair price than a fair company at a great price. Because this period of time is a friend of attractive businesses, you desire to be in one. Ultimately doing more business and paying you more money continues compounding. Warren stated that this is the enemy of poor business practices. Number 5, concentrating on long-term objectives. Warren said that you'll see things in your life that you won't believe, and the stock market is no different. The country will perform exceptionally well in the long term, but if you remain objective, you will observe these massive waves. Throughout that, if you can emotionally distance yourself from the herd, you will become wealthy and won't need to be exceptionally intelligent. However, you should realize that it just requires no brains. When the markets crash, temperament is necessary. If you give it some thought, the market will decline more quickly the more individuals attempt to exit at once. You must be therefore the person who doesn't worry about the coming week or month and believes that the money they invest in the market will still be there in the coming years. If you can do that, investing during market crashes becomes considerably simpler. Just remember to look at the big picture. Thank you for watching this far. Please leave a like, subscribe, and comment down your thoughts in the comment section. This is Finance Sense, helping you keep up with all the latest trends in the financial markets and the economy. Stay safe and look out for the next video.